Street extends momentum as US and Iran gear up for a second round of talks in Islamabad, and global cues lend some support. Nifty surges past 24,500 with broader indices also advancing. Real estate and banking stocks lead with all sectoral indices in the green. Vedanta sets demerger record date on the 1st of May with 29th of April as the last day to be eligible to the demerger. The restructuring aims to create separate sector-focused entities, reduce debt and sharpen capital allocation. PNB housing soars after a strong Q4 marked by profit growth, improving asset quality and record disbursements. Meanwhile, Bank of Maharashtra gains after issuing confident FY27 guidance backed by healthy growth targets. SML Mahindra reported revenue growth, but margin pressure weighed on sentiment, with profit growth remaining modest. Meanwhile, Indo Solar posted a sharp jump in margins and profit despite weak revenue, both stocks under pressure. IT earnings stay in focus, with HCL expected to post a mixed Q4 with revenue pressure and margin compression. Meanwhile, Persistent is seen delivering relatively stronger growth, with deal momentum and execution likely supporting another steady quarter. Nestlé is expected to deliver a steady Q4 with double-digit revenue growth led by volume traction and exports, though margins may come under pressure from higher input and staff costs. We've seen a lot of steadiness, frankly, with regard to markets. Hello and welcome. You're watching Closing Trades here on ET Now. I'm Harsh Saita, and in terms of the index itself, you can see the band in which we're trading. At least since the morning, we've been trading in a very, very tight band. In fact, if I can quickly flag that off, 24,500-ish to around 24,550 odd is where 570, 580 is where we're trading. So it's a very, very tight band, at least since we saw that spike in the morning. So it's a decent kind of day of trade that we're seeing. Very, very healthy, both in terms of the advanced decline and the breadth, which looks strongly in favor of the greens. You're seeing 40 advances to 10 declines on the Nifty 50 index, a sharp fall with regard to the India VIX on your screen. And some of the big gainers within the Nifty pack: Trent, Bajaj Finance, HDFC Bank, ICICI Bank, Axis Bank. So it's the private banks which are actually leading the charge, along with Bajaj Finance in the Fin Nifty. Trent doing well. 2 days out of the last 3, Trent has actually been one of those outperformers. So that one also standing out in trade. What's not doing as well, an SBI Life, a BEL, a Dr. Reddy's are just some of the laggards within the Nifty pack. But within that pack as well, SBI Life being the one that's really standing out. The Nifty IT index, which started the day in the red, turned quickly into the green, and now we're sitting at 0.5% in terms of gains on the Nifty IT index. So having a fairly good day of trade, the IT stocks out there. In terms of sectors and sticking to it, Nifty Realty is up 2.3%, Nifty Bank is up 1.4%, the Nifty Defense Index is up 1%, Nifty PSU Bank is up 0.8%, but it's really the private banks which are shining in trade. And let's pull up the Nifty Private Banking Index. That one should be one of the larger ones, which is doing very, very well for itself, 1.5% higher on the Nifty Private Banking Index. So you're seeing that outperformance visible there. Some of the sectors not doing much: metals, pharma, oil and gas are just 3 of those sectors, but they continue to sit in the green, even though they're not doing much on a day like this. Within the Nifty 500 basket as well, the breadth is strong, 370 advances to 130 declines, so 2:1 on the advanced decline. Over there, 5-Star Finance, PNB Housing, some of the housing financiers, in fact, and lenders are doing very well for themselves today. Bank of Maharashtra, for example, Home First, LIC Housing, you're seeing sharp surges on all of those. You're seeing good spikes. When you're seeing some of the others, a Lemon Tree, and even within the hospitality space, and APJ Hotels, where they've launched 2 new hotels, is doing fairly well for itself. Zentech is the other one. We spoke with management yesterday. That stock is perched 7% higher. Grow, we spoke with management today. Very confident management, 7% higher on that stock. Bank of Maharashtra, Meesho, among others, also doing very well for itself. In terms of the big losers within the Nifty 500 basket, and Eris Life is the one that's standing out, 6% lower. Canara HSBC Life, SBI Life are just some of the big losers. And Ola Electric is down 4%. That one has been a choppy one. Natco Pharma, eClerx are just some of the other losers as well in trade today. But let me bring on board Kunal Bothra. Kunal, what are you seeing in markets today?
Yeah, it's a good day for the markets. The Nifty climbing back towards 24,500 mark. The Bank Nifty trading about 57,000 levels. I think it's a good sign. We've also seen, if I'm not wrong, a breakout of the 200-day moving average for the Bank Nifty. And that's come after quite some time because, over the last, I think, 1 or 2 months, we've seen the Bank Nifty taking a lot of hit for itself. So for the index to try and come back and claw back above or just above its 200 moving average, I think is a very strong indicator. Today also, I think, there's a different tinge to the market because it's the underperforming sectors and the stocks which are making a comeback. Now, you look at the list of names, private sector banking stocks, today classically outperforming the PSU banking names. You look at names like Manappuram Finance. These are the ones which are showing signs of strength. United Spirits, which has been a sort of a weaker stock comparatively with respect to Radico in the same space. So many of the underperforming stocks from the sectors are trying to make a comeback for themselves. Maybe I think that could probably indicate that maybe the markets are now wanting other, or rather going through a phase of a churn where the other sectors which have been underperforming, they are the ones which are getting into the liking from short-term trading perspective. But overall, I think this keeps the market, breath a lot more healthier. We're still trading at a point where the advanced decline ratio overall has been quite positive. So I think till the time we trade into this kind of a market framework, we can expect that the index would continue to show signs of strength.
Okay, index will continue to show signs of strength. Karan here though with some of the stocks that are the big buzzers in trade today. Karan, what do you have on your list?
Let's start off with Zen Technologies. The stock is buzzing in today's trade on the back of the volumes being 11 times the 20-day average. Recently, the company has announced that the company has received the license from the Government of India to manufacture cannons. Yesterday, the management of the company spoke to ET Now and said that the company is targeting a revenue potential of 4,000 crores over the next 2 financial years. Moreover, the company is also expecting the margins to stay above 35%. While majority of the manufacturing of this company is outsourced, the company looks after critical components, quality checks, and the final integration. So do watch out for Zen Technologies. Followed by Prestige Estates. Within 2 weeks of the launch of their new project in Hyderabad, the company has achieved sales of over 1,700 units, and that translates to a sales potential of 2,500 crores. Indosolar is also in focus and under pressure on the back of the revenues declining by 57% year-on-year, whereas the EBITDA margins have tripled. Remember, this company underwent a significant insolvency-led restructuring and takeover by Vari Energies in the past. Grow is also in focus on the back of its Q4 earnings, wherein the profit has jumped 122% and the revenue has surged 88%. The company has commented that the wealth management business of the company is expected to contribute double-digit revenue share in the near term. Lemon Tree is also in focus and buzzing in trades today on the back of a recent announcement, wherein the company is adding a new hotel in Gujarat. With this addition, the company will have 32 properties in Gujarat. And finally, we have Satwik Green. The company has bagged a new order worth 71 crores for supply of solar PV modules. The company's capacity stands north of around 4.8 gigawatts with an order book of 6,000 crores. On that note, the company's book-to-bill is 1.5 times the trailing 12-month revenue.
Okay, thank you so much for that, Karan. Let me come to you, Kunal, with regard to a trend. That stock perched up in trade the second day in 3 where the stock has done very well for itself. What's your take now on charts?
Yeah, it's a fantastic move for the stock because, on a monthly basis so far, the stock has clocked some 33% the last I'd seen. And that's a phenomenal gain for a stock like Trent. 4th consecutive week, for the stock showing signs of a price uptrend. This apparently has not happened for Trent, where it's the 4th consecutive week of price gain since the last, maybe I think 7-8 months or 9 months for the stock price. So that tells you that the mood for the stock price from trading perspective as well as investing perspective, that seems to have changed. And these are the kind of days as well as trends which trigger fresh uptrend for stock prices on the long-term charts. So I believe now Trent becomes a stock in that category. I think now short-term traders should convert themselves into maybe medium to long-term traders in terms of time frame and continue to have a bullish view on Trent.
Okay, interesting. Bullish view on Trent, and you can see that 3.3% higher in terms of the stock price there. In terms of the other movers on the Nifty, Kunal, what's your sector bias like first? Give us a sense of that, and thereafter I'll probably ask you for a stock bias as well.
So, of course, on the benchmark indices, today the private sector banking stocks are looking attractive. But if you ask me as an overall set, I would still believe that realty as an overall pack still looks very attractive. Financials making a comeback, X of banking names. For example, today Chola Finance, Bajaj Finance, they are the ones which are start to show signs of strength and a potential short-term breakout. So that's another theme which has been working quite well. And few of the FMCG stocks, they started off pretty well for themselves, whether it's HUL, Dabur, Colgate, etc. So I think that's another pocket to look out for. So it's now a point where the markets or the index, the more it has to try and climb up higher, the more support it would require from many of these underperforming sectors.
And in terms of stock-specific recommendations, Kunal, what's looking good this afternoon?
So two buy calls. The first from the metal pack. In fact, JSW Steel is what I would recommend at the current juncture. The stock looking attractive around 12.70-75 is where the stock is trading right now. So would look out for targets in the range of 13.25 for JSW Steel. Stop loss to be kept at 1250. The second would be a buy on BHEL, something which you've been recommending earlier also and looks attractive even at the current juncture. The stock now trading at 325-330 range. So would look out for 350 as a target for BHEL. Stop loss to be kept at 315.
Okay, JSW Steel and BHEL looking good to Kunal. But on that note, viewers, time to slip into a very short break. And Nifty holding steady as we speak, about 0.7% higher. We've slipped below 24,550, but we're above the 24,500 mark. So tight range is something that we've seen for the Nifty in the last hour or so. But more news and updates to follow on the other side. So stay tuned.
Top of the world with Times Network. And you're watching ET Now.
In association with SBI, the banker to every Indian truly.
The new Skoda Kushaq. Easy to love. Skoda.
Investments in the securities market are subject to market risk. Read all related documents carefully before investing.
Flight AU079 to Bali is now delayed.
अब क्या करूं एयरपोर्ट पे मैं डिले
More time to kill, bro. अब क्या करें?
गोल्ड ले ले।
Bro, ये एयरपोर्ट है, गोल्ड माइन नहीं।
अरे गोल्ड ETF, गोल्ड में इन्वेस्ट करने का इजी तरीका, कहीं से भी। All you need is a demat account, and you won't believe, ये है regulated and backed by real gold.
Bro, this gold, I'm boarding.
Gold ETF. It's Aaj Ka Gold, a simple way to diversify and balance portfolios from anywhere.
AU सेविंग्स अकाउंट में मिलते हैं अमेजिंग बेनिफिट्स, पेपरलेस बैंकिंग एंड हायर इंटरेस्ट, वो भी हर महीने।
मनी 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 एवरीवन।
सोच बदलो और बैंक भी।
Ready to binge like never before.
Ready? Yep.
Times Play is now on Tata Play Binge with Hollywood movies, television catch-up,
Like I want to see it.
live news, home to pickleball. For all your entertainment needs, press play. Times Play is now streaming on Tata Play Binge.
Welcome back, and we'll quickly get you Nestle's numbers, which are out now. Let's quickly have a look at the stock, and you're seeing a bit of a spike on the stock price there. Of course, this is initial volatility. I would urge you not to read into it too much, but we'll wait and watch for those numbers to come through before we get a sense as to what's playing out. Kunal, FMCG as a pack, is this something you're bullish on? And if so, what are the names you're looking at, your top 1 or 2 buy calls?
Yeah, I think the pocket looks very attractive, and I think if I have to take a current bet at the current juncture, I would still look at Colgate as one of the more formidable names. The stock at 2100 levels thereabouts looks attractive at the current juncture. Would probably expect the stock to at least come back towards its 200 moving average. That would be around 2250, 2300 levels for Colgate. HUL is also something which has been doing fairly well for itself, even though it's a slight relatively underperformer. But I think at 2,200 levels for HUL, that's another stock which I would believe that there is a scope, that the stock would try and at least show a 5 to 7% kind of a short-term uptick.
Okay. We'll quickly have a look at Nestle's numbers, but for the moment, what we're seeing is a 3.5% uptick on the stock price as we speak. There you go, 1114. Is what the profit after tax number has come in at. That's a solid 10% beat versus the consensus estimates of around 926 crore. And when you're looking at the 885 crore number same time last year, it's a significant uptick that we're seeing on profitability, at least on a standalone basis. That's standalone profit after tax for Nestle, coming 10% above what the estimates seem to be suggesting, and around 15% up on a YOY basis. You're seeing strength with regard to profitability. Now the question therefore is it a revenue driven beat, or is it an EBITDA driven beat, or likely is it both? But let's also quickly take a view. Sneha, you've had a look at the numbers?
Okay, so good set of numbers, very good in fact. Revenue has come in at 6,747 crore rupees, which is a 9% uptick versus what we were estimating. And on a year-on-year basis, it's higher by 22.6%. We were expecting only a 13.5% growth, which by itself was also looking very good. So this 22% growth that we're seeing on the revenue looks excellent. You also have the net profit number that's come in at 1,110 crore rupees, so looking very good over there, 1,114 to be very precise, higher by our estimates than about 20%. The EBITDA margin is also looking very good at 26.2%. Our estimate was about 24%, so looking very, very healthy on that front as well. And yes, looking very good overall. We'll be waiting for the press release for the fine print, but in the interim, we have Kaustubh Pawaskar, who's joined us, lead analyst at ICICI Direct. Kaustubh, thanks for your time this afternoon. Give us your first take on these numbers, looking like an absolutely solid set from Nestle yet again, much better than the already factored in good expectations, and the stock is also reflecting that. What's your take?
Yeah, excellent set of numbers. We were anticipating around 14% kind of a growth, and growth came at around 23%. So excellent set of numbers, and in the press release they have stated that double-digit volume growth. So I think overall the performance is much better than what we and Street were anticipating for the quarter.
Kaustubh, what's leading to this? Do you believe how much of this is volume, how much of this is pricing in your opinion? I know it's still very, very early minutes. It's probably a very difficult question to kind of get an answer around, and hi, this is Harsh here. But what's the sense?
Yeah, it is too early to give a perspective on exactly how much will be the volume growth. But overall, the company did extremely well, and I think it is an all-round performance. Because all the categories must have done extremely well. I'm yet to go through the press release, but it looks to be an all-round performance, and that led to the strong double-digit growth.
Double-digit growth on the volumes, Kaustubh. There's also a 50% increase in marketing spend, which has driven volumes higher, is what the statement that's part of the press release seemingly seems to suggest. But does that at all give you some color around what this means from a pricing perspective?
See, Street was anticipating volume growth somewhere in low double digit. I think high single digit to low double digit. I think the volume growth must have been better than what the anticipation is, considering the 23% growth, because Street was also anticipating growth somewhere between 14 to 15%. So growth is much better than what the Street anticipation is as well.
Okay, so that is, yes.
Considering that, we should expect, I think, little uptick in the volume than what the anticipation was.
Okay, so that looks very good, and it's unfortunate that the company doesn't report an exact volume number, but Kaustubh, thanks for that ballpark estimate. Let's also take it across to Devin Choksi, who's joined us on the show to make sense of these numbers. Devin, looking like an excellent set. I'm just going through the press release. The domestic sales for the quarter have gone up by 23%. Your first take on the segmental moves that we've seen? Milk and nutrition, they say, have showed resilience. We were not expecting much of a positive number in this segment. But overall, first, give us your sense with what you're making of these numbers.
Yes, yeah, good afternoon. And you're absolutely right. I think the number uptick of 23% is also driven largely by the volume-led growth, and that is more inspiring than anything else. Because in a situation like this, wherein probably uncertainty is all around, when the coffee price and the milk price have moved up, in this scenario, if your volume-led growth is basically taking care of your higher prices of input, it probably helps. So the beverage portfolio, the confectionery portfolio, as well as I think the food portfolio, that is a Maggi portfolio, each of these portfolios have actually, I think, produced relatively better volume numbers, and so the realization along with. And this is translating into a good amount of profit performance as well. So it's quite inspiring. Maybe I think we should see more such kind of numbers coming from other FMCG players as well. But at this point of time, yes, I think the valuation wise, we always know that I think the valuations are not cheap. But at the same time, I think the growth is suggesting that the stock could possibly find a base here at the current market price.
Okay, so that's on that. And Devin, you also said that other FMCG companies could be producing numbers like this. Do you believe Q4 could finally be that turnaround strong quarter for most of the FMCG staple companies, the likes of HUL, who last quarter saw very sluggish growth, and someone like a Marico, Dabur? Could this be the tide turning for FMCG finally?
Well, I would think so, because consumption power is something which is driving this company, and the consumer in tier 2 and tier 3 cities, they are spending more amount of money compared to the urban areas, particularly in tier 1. So from that perspective, if you look at it, the reach of these companies is giving them the advantage of producing higher business. You mentioned about HUL, Nestle, Britannia kind of companies, they have created a significantly large amount of reach. And if they keep on producing the volume-led growth, then in such situation, inflationary pressure on the input products, be it sugar or be it any other food material items in particular, or even for personal care items of HUL, I think the chemical baskets. Probably, I think these are all some of the areas where high cost pressure would otherwise affect the company. But because of the volume-led growth in the last quarter, they are relatively better. So can't be very sure about it that in April to June quarter, the same situation would prevail. Because in April to June quarter, we are having a situation of higher input cost and significantly higher in some cases. That could possibly have its say on the margin. So one would like to listen to the commentary of the companies, I think, coming out and what they talk about in this particular quarter. That will be more important vis-a-vis the only result of last quarter that we are talking about.
This is Harsha. Give us a sense with regard to the numbers. Of course, it's a standout set of numbers. We've not seen 26% margin since Q4 FY24 from Nestle, and this time it's 26% plus. But I'm trying to understand what the forward-looking headwinds could well be. Could it be that we are seeing a sort of topping out with regard to margins, given that food inflation has started to trend upwards? And could that be a very real risk to margins going forward? And I know that it's the wrong day to be pooping the party, but I'm trying to get a sense as to what could one make of the numbers going forward as well.
Yeah, Harsh, good afternoon. Well, I think you're absolutely spot on. I think this particular quarter is going to be a spoil sport. Input costs in various cases have increased, and I think it's difficult to say at what level I think these companies are absorbing the entire cost at this point of time. because we are still in the first month of the quarter, that is April to June quarter. And I'm not too sure whether I think each and every company has formed up their strategy as to how to beat this input cost pressure that they are facing. In my viewpoint, I think it will be early prediction or maybe early speculation, if at all you want to use that word. I think to bring up the subject of, I think, what could be the impact on the margins for this quarter. We hope that they are in a better position to pass it on. Fortunately, the consumer demand scenario remains absolutely strong and it's robust actually. So from perspective of looking at this particular quarter, April to June quarter, one would listen to the commentary of the management, of course, but we believe that I think the consumption pattern is not changing, and that gives you more confidence. Cost pressure might affect 26% margin, may not remain. It may have, I think, it's say of 1.5%. Who knows? I think at this point of time. But if that is so, then some amount of moderation can be expected on the perception side. Maybe the profit picture will continue because of the higher amount of volume-led growth that these companies are producing. That is my take, at least for now.
So that's a very comprehensive take on these numbers. And like you were talking about commodity costs, in their press release, Nestle says that coffee prices continue to trend lower, supported by favorable crop in Vietnam and forthcoming crop in Brazil. Cocoa prices remain subdued, sugar prices remain stable. What they're not liking right now is edible oil prices. They are firm, they continue to move higher, as has been the case with wheat because of unseasonal rains in April, and milk prices are also firm. So that was the take coming in terms of the press release of Nestle, what their commodity outlook is. However, despite this, they have not set out any announcement or any forward-looking statement on what they aim to do with all of these price hikes. Will they pass it on? Will they absorb? So that was Devin Choksi who had joined us on the show. Thanks, Devin, for that. And he was talking about how these companies may be able to pass it on entirely, the price hikes that we're seeing, or they could get absorbed. And if they get absorbed, what happens to the margin number? 26% looking solid right now. But how sustainable is this in the future is going to be something to watch about. But that is a worry for a later day, because if you take a look at the stock of Nestle right now, looking exceptionally good, 4% uptick on that one. Kunal, quick chart check on Nestle.
Yeah, it's a very strong day for the stock. Coming back into a multi-month breakout, I think, if I'm not wrong, almost like a 1.5-year breakout for Nestle, very close to that. So I think it's a very strong day. This also reached a point which I was making earlier, that the FMCG stocks are at the cusp of revival for themselves. Of course, stocks like Nestle and the price movement over here would probably exude confidence across many of the other stocks in the FMCG pack. So it looks attractive.
Okay. Kunal, just another quick question. It's looking strong today, but what are the levels this opens us up to? So that's the first part. And should one, if someone has missed today's move, should one initiate a fresh long at the current level, or are the downside risks outweighing the upside?
No, I would say the upside risk is outweighing the downside risks for the stock price. There is always a possibility that stocks post results, even after delivering great results, they would probably come into a slight bit of price correction. That's a natural way of how stock prices work, because traders, they generally jump into the stock prices in the anticipation of the results, and once the results are delivered, say above expectations, which is at par to the expectations for traders who have taken positions earlier, they're bound to close down some positions over there. So there could be a mild profit booking here or there, which could probably happen, but that would be part and parcel of how trading framework generally establishes for such kind of stocks. But when results and when fundamentals generally drive into the stock price, we generally see stocks breaking out into new regimes for themselves. I strongly sense that stocks like Nestle, and with the help of Nestle, other FMCG stocks could enter into that stronger regime where these stocks could break out and see much more higher levels for themselves on a positional play.
Okay, so that's on Nestle and some of the other stocks in the FMCG basket. But on that note, time to slip into a very short break. We'll be talking about lots of stocks and lots of sectors on the other side. Get you a fundamental as well as technical view on all of them. So stay tuned and we'll be right back.
Welcome back, and thanks for being with us. In fact, Meryl also joining us on this part of the show to try and give us a sense of what are the other buzzers in trade. Meryl, what's on your list?
So yes, here's a few stocks that we've seen buzzing in trade today. First up is SML Mahindra. The company's recently posted its fourth quarter earnings. And they've seen quite a bit of margin compression. In fact, their EBITDA margins have fallen about 170 basis points, while the revenues rose almost 16% on a year-on-year basis. The management of this company has said that they've faced a lot of higher input prices given the ongoing geopolitical situation, and the company was not able to pass on these prices to customers in the fourth quarter. Also on our list today is Eris Life Sciences. Its subsidiary Swiss Parenterals saw an inspection by Holmed, which is the Croatian drug regulator, and the company is now expecting delays in commercializing its CDMO product pipeline in the European Union. Remember, Q3 had also seen margin compression due to these heavy investments in these products, and while benefits were expected to come in from the first quarter in the hospitality space, we've got APJ Surendra Park in focus after the company signed agreements for 2 new zone connecting properties in Ayodhya as well as Ujjain, which is tapping into India's growing spiritual tourism theme. And the last name today on our list is Nelco in focus after posting its results. Revenues were seen rising around 17% up to 79 crores, while the company returned to profitability compared to the loss that it clocked last year. So yes, here were some stocks that were seen buzzing today in trade.
Thank you so much for that, Meryl. And some of the buzzers, frankly, also sit in the real estate pack. That one is up 2.2% in trade today. A Sobha, a Signature Global, a Godrej Properties for a second straight day, a Phoenix, a Loda, all of them are gaining over 2% or so in trade. I know, Kunal, that you're positive with regard to realty. Your favorites within this pack?
Yes. So I think now what's happened is that the likes of Prestige, Godrej Properties, they are the ones which are looking a tad bit more stronger on the recent charts, and specifically with the kind of momentum they've built up. Godrej Properties today breaking past just about that 1805 odd mark. The start had seen, and moving up by at least another 25-30 points at the start. Prestige, I think, closing about that 1400 mark or trading about the 1400 levels. DLF, the stock which has been an underperformer on the relative strength basis on the real estate pack, that stock has climbed back about the 600 levels. So there are new favorites which I would probably believe that the real estate sector is getting in towards. And even after a 25% kind of an up move from the previous month close of 650 on the Nifty Realty Index, it's just glad to see that many of the other stocks from the real estate pack are still trying to inch up higher and trying to cover up the underperformance. That keeps the sector a lot more vibrant. So I would probably believe that the trend on the near-term side for the real estate stocks still looks quite positive.
Okay, the trend in realty is still positive. Kunal, what about defense?
Yeah, so that's not the stock, rather a sector which I would still believe should see more legs on the upside. Today could be a off day for many of the defense stocks, but I think at the start you saw many of the defense counters looking very attractive. I strongly sense that we are looking at a potential possibility where many of these stocks are converting their daily time frame chart breakouts into a weekly or a higher dimension breakout for themselves. That's a very good sign or a signal we look out for, because when stocks mature into a higher time frame in terms of breakouts, there is a possibility as well as a potential that we may see all the ingredients, a long built up, a blend of short covering, positive news flow if that emerges for the defense counters, that aids the stock into going to further leg of the rally on the upside. And remember, I think 2023-24, we saw many of the defense counters to be extremely high beta. And we've seen a phase where these stocks used to recover or rally 15% to 20% on a trot for many days long. I sense that many of these defense counters are now heading to that kind of a prime, at least in terms of price performance.
Okay, so that's on some of those stocks in focus. But let's refocus and talk about Bank of Maharashtra. That stock gaining after issuing a confident FY27 guidance backed by healthy growth targets. Mithali is joining us with the highlights and what's making the stock perform so well in trade today. Mithali.
Right, so talking about Bank of Maharashtra, very strong quarter indeed, and also a strong guidance coming in for FY27. First on the earnings side, if you see for FY26, the profitability front, it was up 35% on a yearly basis, while the NII also grew around 20%. The ROA is close to 1.9%, actually among the best in the PSU banking space. What's really standing out is the margins. Despite the rate environment, they have delivered a NIMS of around 3.9%, beating the management's own guidance. On the balance sheet side, the advances have grown around 20%, while the deposits are growing in the mid-teens for the bank. The asset quality is another big positive. The GNPA is down to around 1.45%, while the net NPAs is almost negligible to 0.13%, and credit costs are also trending lower. Plus, they've created an additional buffer provisioning of around 200 odd crores for the geopolitical risks, which tells you that the management is already conservative. Now, coming to the guidance for FY27, they are building for around 16 to 17% of the business growth, with 18% of loan growth and about 15% of NII growth. They're guiding NIMs at about 3.75%, which is actually lower than the current rate. So actually, you can see that there's a room for positive surprise going ahead. The ROA is guided for 1.8% and ROE at 20%, both of which are very healthy. So overall, with a very strong quarter and also a stronger FY27 guidance, the streets are seeming to celebrate the stock.
Thank you so much for that, Mitali. That's, of course, Bank of Maharashtra for you viewers. That stock doing very well for itself, 6.5% higher. The other one, which is actually doing very well for itself, is also a PNB Housing. What a move on that stock as well. Since the morning, that one has been doing extremely well for itself. If we can pull that one up, gives us a perspective on the move itself. 8% higher on PNB Housing. At one point, had touched that 10% mark as well. Above 1,000 rupees a share is what this one traded at for a brief while. PNB Housing, Bank of Maharashtra. Kunal, do you have a view on either of these?
Yeah, I think Bank of Maharashtra is something which is very interesting because, from the mid-cap or, tier 2 large cap names, I think this is one stock which is coming back into a huge breakout. This is almost like I think a 10-year or a 12-year breakout for Bank of Maharashtra, where the stock has crossed the previous highs in 2025, I think around 76, 77, and crossed back about those levels. The volumes today are one of the highest the stock has clocked in the last many months. So that also reiterates that we're looking at a fresh breakout of sorts for Bank of Maharashtra. This, I believe, could be a stock which I think should now be a lot of interest to long-term investors, because long-term investors, they generally want to chip into those names which confirm breakouts of multi-month, multi-year highs, and that too on the back of higher volumes. So I think that's another name from the PSU lot which is looking extremely attractive.
Okay, so that's on a Bank of Maharashtra, and Mitali was just talking about its guidance, and Kunal has also given us a technical view over there. On the flip side, I'm just looking at some of the other Nifty 500 gainers today. It's Elecon Engineering, 8.8% higher. PNB Housing and Bank of Maharashtra come after that. Grow continues to do well, uptick of 7%. And then you've got something like a Lemon Tree that's up 6.5%. Kunal, it's an interesting move coming in on Lemon Tree because day before yesterday, we saw positive signings, that news for Lemon Tree, and that momentum for the stock continues. Today, we've seen new signings for a PJ Park, Surendra Park hotels. That's also positive. I'm just trying to get your sense on the entire travel and tourism theme. Anything looking good from there in terms of hotels? Any of the smaller players like these compared to the bigger players like an ITC Hotels or an IHCL, what's looking better?
Yeah, I think there are a lot of these stocks which are trying to make a comeback. I was looking at Chalet Hotels, ITC, Indian Hotels, etc. I think, and these stocks had been beaten down significantly in the last 6 odd months, because there was a point where even names like Indian Hotels had corrected by more than 300 points from the previous highs. That's constituting around 20 to 25% for the stock price. Names like ITC Hotel, the stock corrected almost 100 points from its highs in 2025 of 250 to 150 levels thereabouts. So many of these hotel stocks had corrected more than 50% or 25% from their previous highs. They are now trying to make a comeback for themselves slowly and steadily. And it's very good to see that you don't see any strong or a very sudden kind of a price move. You're seeing more of a calibrated, a very slow, gradual price uptick into these names. Volumes are being chased, on the uptick for many of these stocks. So that tells you that the interest is there on the buy side for many of these names, especially when they are heading to a breakout, as compared to the volumes when these stocks are falling on the downside. So that's a strong indication. From the pack, I would probably believe that Indian Hotels at 665, I think the last I had seen, the stock looks attractive at the current juncture. Chalet Hotels is also something which looks attractive, from a medium term or a positional play.
Okay. Let me in fact go across. We have Sajid waiting by with regard to the FNO snapshot, giving us the cues with regard to how positions are shaping up in the market. Sajid.
Thank you, Harsh, for that. Nifty up significantly in the last 1 hour, up 0.7%, and we are seeing a good open interest build-up also happening in Nifty 50 futures as we speak, 0.8% up in open interest, some shorts getting added as we speak there, but it's trying to stay above the 24,500 mark as we speak. But look at what Bank Nifty is happening, doing there. The open interest up nearly 1.18%. The index is up nearly 1.3% there, and there is a shorts which are getting covered in Nifty Bank, and that's the reason why we are seeing some good open interest build up also happening, because there is some fresh shorts and others are and some covering of shorts also happening as we speak. HDFC Bank, ICICI Bank and Axis Bank seeing long positions getting built. SBI, Bank of Baroda and Bank of India are seeing positive with some shorts covering happening in Bank of India and in PNB as we speak. Bandhan is also seeing some shorts getting covered, and between Kotak and IndusInd Bank there's some long positions getting added there. The Nifty Bank Index trading at a discount as at this moment. Again, put riders are very active in today's trade. 24,500 is a very active strike in today's trade, where put writing has been aggressive, and this is for 21st. But 28th April put is also something where you're going to see a similar kind of trend, where a lot of activity happening in Nifty April 28th series there. Again, for the current series, you have 24,500, which is very active with put writing at 24,500 there, but you have resistance coming in at 25,000 as we speak for the Nifty. Futures also seeing some kind of shorts. Future gainers has PNB Housing, which is seeing a short covering with the stock is up nearly 7.6%. Nestle, after good numbers, seeing some long buy coming in, stock up 5%, and LIC Housing is also seeing some good buying of nearly 5% jump in LIC buying, LIC as we speak. Though in the futures losers, you have some of the insurance players which are active with shorts getting added in insurance. SBI Life, Max Fin are some of the stocks where we have seen some selling coming in, some uncapitalizing, some long unwinding happening. Open interest. Again, Aurobindo Pharma, we are seeing some long build-up happening. 14% jump in open interest for Aurobindo. PB Fintech is also seeing a long build-up with 13% jump in open interest, and HDFC Life is seeing a long build-up with 12.5% jump in open interest there. Most active, open interest losers include Colgate, Ireda, where there's a long unwinding happening, and IRFC, where there's a short covering coming in. Among the stock options, you have stocks like PNB Housing at 1,000 April call, which is a 1,000 strike price. Open interest up nearly 11.56 lakhs. The premium is up 9.35 to 13.6, and the stock is hovering around 977. So it's cooled up from the top, but staying below the 1,000 level mark. HDFC Bank 800 April put is also seeing some activity with nearly 7.6 lakh contracts getting added in open interest. The stock hovering about the 8,000 mark, and the premium down nearly 9. So now it's a market where we are seeing some kind of rollovers happening in the options as we speak, and 24,500 seems to be a good position at this point in time.
Siri, thanks so much for taking us through that. So that was Siri who had joined us with a roundup of everything that's shaping up in the FNO universe. But on that note, viewers, it's time to slip into a very short break. More news and updates, and of course stock reactions, and we'll be decoding some of the stock moves in the other segment as well. So stay tuned, and we'll be right back. Back with closing trades, and select PSUs will be in focus as the government is mulling to upgrade their status. My colleague Prakash is joining us with all the exclusive details on this. Prakash.
Well, a very positive development for the shipping and defense sectors, that the government has reviewed status upgrade for some PSUs in the shipping and defense sectors based on their financial performance. And their PSU status is likely to be upgraded very soon. Sources suggest that the PSU status of Cochin Shipyard may be upgraded from Mini Ratna to No Ratna, In fact, the Department of Public Enterprises, which comes under Ministry of Finance, is actively considering the proposal which was sent by the Ministry of Shipping and Waterways. In addition to that, an interministerial committee may also clear the proposal to upgrade the status of GRSE, which comes under Ministry of Defense. In fact, the proposal has already been cleared by the Department of Public Enterprises, which is now pending with the interministerial committee. The evaluation process is at final stage, and sources suggest that the final decision would be taken by the next month. A very significant development coming in. Of course, an upgrade in status will provide greater operational and financial freedom to these companies, which may play a very crucial role in their financial decisions. You are also aware of the fact that a Navratna company is permitted to make investment of up to rupees 1,000 crore without seeking government approval. Therefore, an upgrade in status will provide greater operational and financial freedom to these companies, which may play a very crucial role in their financial decisions. In addition to that, sources also suggest that the government is also reviewing the overall criteria for Ratna categorization to ensure greater accountability going forward.
Thank you so much for that, Prakash. That's, of course, some exclusive details coming your way. But let me bring on board Shivangi Sardao of Motilal Oswal, joining us here this afternoon to give us a perspective on how she's viewing markets. Shivangi, we've seen some bit of resistance come through, but can we say that we are decisively broken past the bottom, or could we at all see a bit of a correction from here, and if so, how much?
Very good afternoon, Harsh. Thank you for having me. So we've seen that markets have in fact witnessed quite a bit of resistance at 24,600, which has now become a very sticky zone. So a hold above this would now trigger a fresh rally. But then again, we've seen support-based buying is quite strong at these levels. In fact, from the last 4 trading sessions, we've seen Nifty respecting 24,100 odd mark. So overall, this would be an important positional support to watch out. But immediately, we could watch out for 24,350 levels. Now, of course, we're entering into the monthly expiry week for Nifty thereafter, and some bit of volatility will be expected here. But upside, we are looking at 24,800 next on the cards for Nifty index.
24,800. I wonder, Shivangi, if today's move within that private banking pack gives more of a leg up now to some of those names.
So definitely banking stocks have been in action today. And, we've seen that heavyweights have witnessed some bit of short covering, but the, strength has been seen in the PSU names from quite a long time. We've seen that from the last 2 weeks, there is momentum building up here. So in fact, the entire space looks quite positive, but we need to be selective onto the, movers. ICICI Bank is one such one such name, and we could also look at Federal Bank from the smaller banking names. So these two look quite attractive at these levels from the banking space.
Okay, your picks, give us those, Shivangi.
So ideas, I would look at Cummins right now. It has consolidated from the last 6 odd trading sessions, and we've witnessed some bit of cool off from the higher levels today, but overall larger time frame levels are intact, and we've seen volumes also adding up over here. So this is one stock on radar, and especially because all the other stocks in the same sector has moved, and we are witnessing some bit of tailwind. So 5,300 is what I'm looking at for the next targets, with the support of 5,000 levels here.
Okay, with that, let me bring on board Pashupati Advani from Global Foray, joining us this afternoon. Much awaited conversation. It's been a while, Mr. Advani. So great having you. Let me first start off by asking you, what have you been doing in this market? Have you bought the dip? Have you stayed away? What's the view there?
I've been trying to hide like everybody else, but I think so far there's been, now there's some good news coming through. So I think that people have started to bite at the bottom. I am unfortunately not one of those. So I'm watching the market go up and hoping for yet another dip, because every time the market goes up, we still don't have clarity on whether the straits are going to be open or not. And one of the things that's actually bothering me is that our currency became stronger, went to 92 and change, is now back at 93.5. So I think that's a little worrying, because that's telling us that the Straits of Hormuz are they open or are they closed? I don't know. Do any of you know on this channel? I mean, it's a guess, right?
Yes, absolutely, Mr. Advani. In fact, quite literally, we're in the same boat as you. We're making
Are you
straight.
in the same boat?
No, we're making Strait of Hormuz puns now, because we really don't know what's happening.
You can go straight there if you're in the same boat.
No,
but anyways,
I'm so glad I'm not.
Well, Hormuz is my. I guess I should make Hormuz my Parsi relative. Then we'll make sure that it opens quickly. It opens quickly. But no, we definitely need the straits to open. We're getting oil from the other side of the straits, and we're getting LNG from the other sides of the straits. At least here on the ground, I'm seeing that this LPG cylinders are quite hard to find, and there's a fiat to only get one a month, because you're only allowed to book 25 days after your cylinder arrives. So I think that we're going to have to tighten our belts in all these things, and it is a challenge. We are at home managing, but I think that in the restaurants and all, they're having a lot of difficulty. And what worries me is that we are okay in large city like Bombay, but if you go to the north, they'll start burning wood soon, and then you'll have the same kind of problems that you have in the winter in the summer, because I think that shortage of LPG and LNG in that part of the world gets people to be a little radical. So let's see what happens.
But Mr. Advani, so just kind of taking this conversation a little bit further, what does this do to earnings, therefore? Give us a sense. I know that you don't track percentages, but give us the ballpark broadly. Were you expecting double-digit earnings growth in FY27, and does that go for a toss in terms of a thesis?
So obviously, I mean, 2 months seem to have been gone. It was the end of February that this war started. We are now almost at the end of April. So 2 full months, except we are lucky that it's spread over 2 financial years. But I think that 2 full months taken out of a company's earnings is a lot. They're all scrambling. I think anyone who is dependent on anything that is coming from overseas is in some difficult state. And of course, we are seeing difficulty in the IT sector, where they are trying to, rebalance and try to figure out how to do it. But, the big 4 American companies and the data centers and the NVIDIAs of this world are actually changing the game. So even all the new investment is coming into that very, very narrow niche sector, which is also not very healthy in my opinion. But I think what's happening is that, our IT companies are scrambling to try and change their market models. And I don't see any of them that's been able to succeed so far, even though the prices look a little bit better. But I think that, they are struggling to be able to make numbers.
So what happens therefore, Mr. Advani? I'm glad you brought up IT. So what happens therefore? You've got this wave of AI coming in and hitting IT. What next, and when does the visibility likely improve? Because in terms of commentary, we're not seeing absolutely any admission that that clients are not looking to place fresh orders, or anything on ground seems to have changed. None of that coming out, at least from TCS Wipro.
Well, the thing is, the US is also playing the immigration game. So the H-1Bs are, if they're issuing new ones, they're $100,000 each, and they are being very sparse about issuing them. So that's actually a big challenge for our IT companies, who basically used to send people into companies in the US and get business as a result of it. That's one challenge. AI is another challenge. Though again, hopefully our people are starting to learn AI, and AI is teaching AI, but that doesn't do good for jobs. And I think that's the other challenge, that we're going to lose a lot of IT jobs. And with that, you've got the knock-on effect of default on loans, default on housing loans, default on maybe white goods loans, because people have just been having their salaries and doing it. I have a friend who was senior in one of the companies, and he was not able to get a new assignment for 6 months. So on the 182nd day, he got a notice saying goodbye, and he was earning quite a lot of money. He was on actually a foreign scale. So that's the realities of life. They are actually asking people to leave, and I also heard a figure that between all the IT companies, the total net increase in staff was less than 1,000. Now, I don't know whether that's a accountable figure, but it definitely scared me if that's the case, because every year we're used to all the IT companies taking 25 to 30 each, the big four are taking 100. For them to be basically net zero is not cool. And I think that's going to have a lot of knock-on effect, not today, but at least 6 months to a year down the road.
Okay, Mr. Advani, you made a very interesting point that a lot of skilled talent is coming back home when it comes to the IT space. That has an impact on the GCC segment of our market. And secondly, let's talk about the recovery in IT. We've seen a very meager recovery coming in from the low, but do you believe that the tides are now turning for IT in terms of talent coming back home and a lot of advancement when it comes to AI?
No, I think it is good that some of the talent is coming home. I think that's good for our country. That will start new businesses, new startups, maybe a whole bunch of new unicorns, which is actually very good for our country. But this is a long road, and I think it's not happening immediately. What we've got instead is the real old line industries which are delivering value, like cement, like steel, where the government is continuing to give contracts to complete, the roads and buildings and RERA and things like that, as well as, there is pressure to complete what we have started. I mean, I'm living in Bombay and enjoying the Coastal Road and watching Coastal Road 2 and Coastal Road 3 being built. So definitely I can see cement and steel in the markets there. So those old line businesses are going to do okay, but they are now challenged with this war because of the cost of power, and power is definitely a very large component of both the steel industry as well as the cement industry, as well as some other heavy industries. Plus, we have a shortage of rare metals, which is a different story altogether, but that's the way it is.
Okay, so that's on the IT ecosystem globally as well as back home. Shivangi, we still have Shivangi with us on the show. Give us your sense on some of the IT stocks purely on a technical basis. What looks good? Is it the larger end of the basket that's looking good with the top 4, top 5 names? Or are you expecting the mid-cap end of the IT companies to perform much better, at least basis what the charts are telling you?
Hi, Snehi. We've seen that IT stocks have actually kind of rebounded from the last 5 odd weeks. But overall, they're still getting stuck at their 50 daily exponential moving averages. I mean, of course, most of the stocks, but amongst all of this, I'm still, eyeing at some of the heavyweight IT stocks. But then again, we'll have to wait and watch for these levels. Still not a very clear, comfortable buy at these levels, because they do have a tendency to go lackluster from the last few, months. So one could wait and watch here.
Okay. We'll have to give this very engaging conversation a bit of a pause, slip into a very short break, come back, continue this conversation. Stay with us, viewers. It's going to be an interesting one. Thanks for staying with us. And we have with us Pashupati Advani as well as Shivangi Sarda and Kunal Bothra as always. Mr. Advani, let me come straight back to you. We spoke a little bit about IT, but largely you seem to be indicating that you're staying away from markets, right? At this point, at least, from making any fresh positions. Are you liquidating anything? Are you starting to sit on cash as the market inches higher, or you're not doing that either?
No, I did do that. I'm actually now looking for interesting things to buy, things that are going to, hopefully withstand the fact that the Hormuz Straits are going to keep getting open and shut. So, I think there are some interesting opportunities. We are seeing some push from the government to, as I said, to complete infrastructure. So those companies are definitely going to be there. The second thing is that you're getting a push for defense, for example. We're going to need defense because the war is literally around the corner from us. And, if they're talking about starting another front in Yemen to stop the Saudi Arabian oil. So I think that it'll be even more important for us to have more defense. So I think that's also going to happen. So I don't know. I mean, it's just, it's a tough one, but there are obviously bargains in there. FMCG's also got hit, but it's not getting hit. I mean, it seems to be turning around a little bit. So who knows? I mean, we have to just keep plugging away till we find things that fit all the parameters.
And how do you judge that? So you seem to be giving us a tilt of infra, defense, so maybe a lot of government spend related, and then consumption. So I'll come to consumption in just a bit. Let me talk about defense and infra. Do you believe that multiples have inched higher and therefore the margin of safety is lower? What's keeping you positive from that perspective, from a valuation standpoint?
So those sectors look like they're here to stay. Government is continuing to invest in them. So like even EPC companies, you're on the treadmill, you're doing work. While you're doing work, you're making money. Now you have to manage your costs. As I said, some of them, they are able to pass the costs on. Some of them are not. The ones that are not able, the ones that are able to pass the costs on are going to do well. And I think that well in the sense they're not going to jump and go up 30-40%, but at least will outperform the rest of the market. And that's what I think we're looking to do. You have to take the Nifty or the Nifty 100, and you have to take out the good scripts from that. I mean, pharma also is an interesting sector. It's been all over the place. It's a thought, as to where it's going to be. But, I mean, today it happens to be down, but I think the last few days it's been up. So, I think there are different things that one could look at and then selectively buy 2-3 in each of those sectors and remain quasi-invested. I don't think you should exit the market, but I think definitely you should reposition. I am not wild about IT, as I mentioned. I'm also not so crazy about financials. And in banks, I think the banks are okay for now, but I think that, it depends on how the NBFCs and the other financials behave. So I think that's what, let's see what happens. And then, of course, there are two other beautiful IPOs coming. One is NSE and one is Geo Financial. So I think that those are going to be worth looking at. And let's see what happens on those.
So very interesting roundup of what's looking good and what's not to Mr. Advani. But while we're talking about sectors, the Nifty Realty has extended its rebound, rising nearly 3% today, with all the constituents in the green and the index now up 23% from recent lows. In fact, my colleague Ravinder, who tracks the sector closely, is joining us to tell us why and what has led to this move in the Nifty Realty. Ravinder.
Well, as a real estate stock is in focus in today's session, and Nifty Realty is up alone approximately 3% on an intraday basis. And if we compare this Nifty Realty index on a MTD basis, then on a MTD basis also, index is up around 23% and is set to register the biggest monthly gains in approximately 5 years. And all the constituents of the Nifty Realty index were trading in green. But let's look at which are the reasons which are the key reason behind this rally. First is positive sentiment. Remember that almost major real estate companies has announced the Q4 FY26 and for FY26 operational update. And apart from a few of the companies, all the major companies has reported a very strong operational update in Q4 FY26 and for FY26. And Signature Global and Lodha has missed their guidance. For Signature Global, guidance missed on the back of slowdown in entire NCR region, and for Lodha, guidance missed for FY26 pre-sales after March saw selected deferrals of sales due to Iran war. And Shobha Limited, Prestige Estate, Godrej Property and Lodha Developers recorded pre-sales at a record high in the FY26. And on a quarterly basis, then Lodha Developers, Godrej Properties has recorded their highest ever quarterly sales in Q4 FY26. Second major key growth driver is valuation. It is the real estate stock is also seeing a valuation correction. And if we talk about the stock specific, then Prestige Estate is focused after company said that they have seen a strong response to Prestige Golden Grove in Hyderabad, which has clocked 2,500 crore in early sales, and project has a total estimated GDV of rupees approximately 9,200 crore. Overall Realty is also in focus after reporting an inline set of number. Companies reported an inline operational number, but the pre-sales has growth was strong on a yearly basis and on a quarterly basis. Gross booking value grew by approximately approximately 2 times on a yearly basis. And Godrej Properties, then remember that yesterday Jefferies has come out with a note where they have highlighted the management meet that they said that the management believe that that while housing industry has inherent cyclicality due to supply response challenges, the industry is unlikely to see a downturn, and companies should have sustained pre-sales of 20% over the medium term, which is driven by the 10% volume growth. And Jefferies has maintained the buy rating on Godrej Property of rupees 2,420, and they expect company to deliver a 20% ROE target for FY28. So because all these reasons, real estate stock is in focus.
Okay, Ravinder, thanks so much for taking us through that. So lots of reasons why the Nifty Realty basket has been buzzing, not only today, in fact, for quite some time now. Shivangi, your take on some of the Nifty Realty names, anything that's looking good? Fundamentally, the quarter four updates for most of these companies have been very strong, Oberoi Realty being the latest. But on the charts, what's looking good?
So definitely, the entire Nifty Realty space has come into a lot of action. If you look at the major names, I believe Godrej Property is one such name which is catching a lot of attention here because of the volumes that have added in the last hour specifically. We've seen that there has been some bit of resistance at 1900 levels, but overall this stock looks quite positive for the immediate 1900 zone. So one could definitely keep a radar on this. It has come out of its consolidative band of the last 8 trading sessions. So, a good, comfortable zone over here.
Mr. Advani, how would you play consumption? Realty at all would be one of those?
Well, I'm a little bit sort of slow on realty because it's a sector that you mentioned Godrej Properties. The advantage they have is they own lots of land in Vikhroli, so they can keep building and keep selling. I think right now you've got more supply than demand. So I think we have to wait for that to change a little bit. But I think it is a sector that says it's the growth of the future, and therefore you need to be somewhat positioned in it. Whether you stay in the top names like the larger names like DLF and Godrej and Soba and Prestige, or you move to the second tier is 6 of one, half a dozen of the other. But along with that, you see things like insurance, which obviously should go because everybody who buys a property will have to carry life insurance to cover in case they die and they can't make the EMIs. So that's another sort of industry that follows realty. So I would rather buy insurance than realty because at least it's an industry that we in finance understand.
Point taken. So therefore, how should one play consumption? One is, of course, you've given us an idea with regard to defense, infra, and probably insurance. But consumption at its core, how would you play that?
I guess you have to do FMCG, at the end of it all. Now, the FMCG, the multiples have been huge in India, but the fact is that people are still eating, people are moving to branded. PE likes Indian branded because they've come into Haldirams and they've come into names like that, which are saying that they want to have more organized. But our unorganized sector is still, fighting away and is there. But I think gradually as people get more and more organized and, we have got enforcement with income tax and GST, and we're moving to be healthier. And as we get more and more per capita income increase, we will see the shift to the FMCG companies. And I think that's also something you can sit and, just sit on. It's just not going to happen maybe in the next 6 months to a year, but it's in the cycle. And we're looking for a big move up cycle, I think.
Okay, so Mr. Advani, while you say that about consumption, I'm just trying to get a better understanding on staples versus the entire discretionary basket. Yes, the GST cut and a lot of those factors have aided staples on one side. On the other side, you have the edible oil prices that are going up. So that is also something that weighs on the margins of staple companies. But what about discretionary? There's QSR, there is a platform companies, there is travel, tourism, hotels, hospitality, so much within the consumption basket, retail, fashion, jewelry. Anything looking good from that space?
Yeah, I think, with the Middle East closed, we're losing a lot of seats of people coming to India. So our tourism and hospitality industry has been hit quite hard. They are sort of trying to grin and bear it, but I don't think that, our local consumption is able to step up to that gap, and it is hurting. The flip side is, I don't know if you've checked the price of going to Europe or going to the US recently, but the prices are quite sticker shocking. So I think that, you can use that as a quote because, so now that you've knocked out or made, almost people are scared to take Etihad, Emirates, Qatar, and to some extent even Turkish, the big four. So that's affecting, people going on holiday overseas. And so I think, and then of course, with domestic prices going up because of the cost of fuel, which is 1/3 of the Indian Airlines cost, I think those are things that are going to change the whole equation. So that industry is getting wounded. But again, people do want, seems to be some money here. Money seems to be available. People are having money to spend and they're trying to do their holidays within. So, who knows? Maybe that's good for companies like IRCTC or things like that. It's just, something different. I mean, we need to look at other things, but different transports.
Right. Of course, you'll have therefore a couple of earnings which will come out, and we'll talk about that in just a minute. But Mr. Advani, anything that you're selling at this point, or you're absolutely not touching at this point? Avoid.
Well, as I said, I'm avoiding IT, and I'm also avoiding the actual NBFCs that are out there. I think that most of them are very highly leveraged, and they've got a lot of loans that they have kind of pushed away because they had equity, and they're finishing their equity. So I think that it will happen that I don't think they're defaulting per se, but they're burning through their equity, and I don't think they can go back to their investors and ask for more, because I think private equity is also drying up. So let's see.
Financials, therefore, would you play capital markets? Would that be maybe the better way to play it?
No, I think the big banks, you still have some. I mean, we're not in an economy that's collapsing. So I think the big banks and certainly the big private banks and the big public sector banks are here to stay, and they're going to pick up most of the slack, and they're going to do most of the lending. They're still out there pushing credit cards, pushing home loans, all their traditional projects. So they will continue to do well, and there seems to be enough money, firepower with all of them. Now, whether you invest in a first tier or a second tier, that looks at your risk horizon. But I think that one should look at the private banks, look at the large public sector banks for sure, and then look for potential takeover candidates. I mean, last year we were talking about the smaller mid-cap public sector banks and semi-private sector banks that were looking at takeover targets. That's gone quiet, but I think that will come back as well.
Okay. Within banks, AMCs, Kunal, anything that you're finding interesting? You've seen a bit of a spike today on HDFC, ICICI. We did take a view from Shivangi there. Also within AMCs, anything that's looking interesting? Capital market players, AMCs and the like.
So there are three names which pop up on the chart. One of them, of course, is ICICI AMC, recently listed stock. So a limited price history, but I think that stock is doing phenomenally well, crossed the levels of 3,000, very, very comfortably back again after a recent correction for the stock. Nippon Asset Life, that's another stock which has done remarkably well. I think today it's up 5% or 6%, the last I had seen for the stock price. Again, a stock which has done exceptionally well on a consistent basis over the last many quarters, specifically over the last 2 to 3 years. HDFC AMC is another name which has been a lot more consistent. The stock is trying to show signs of recovery. Of course, from the relative strength basis, the stock could probably be something to watch out for in terms of covering up the underperformance. So there are a lot of stocks which one could look out for in terms of picking from the entire AMC pack. The more consistent ones at the current juncture, of course, is ICICI AMC and Nippon Asset Life.
Okay, so that's within the financial basket. But Shivangi, while we're talking about financials, any favorites from the PSU space? They've not been performing very well of late, but seeing a little bit of a recovery, let's say from the last 1 or 2 trading sessions. Any favorites within that space?
Definitely, the entire PSU banking space is now looking at revival. And one could look at stocks like SBI. I mentioned Federal Bank earlier as well. So these are looking quite positive and lucrative for the next few sessions.
And what's the take with regard to maybe the Nifty Private Bank? Is there a view there that you have, Shivangi?
So Nifty Private Banks, we've seen stocks like ICICI witness a good amount of short covering. Adding to that list is also Kotak Bank, which was doing quite well from the last 4 trading sessions. But we could actually look at these stocks. Even for that matter, Axis looks quite positive. So Axis and ICICI would be the preferred ones, and then comes Kotak from this space.
HCL Tech also will come out with Q4 numbers. Let me take it across to Darshita, who's here to tell us what the street expects from HCL Tech's numbers.
Let's look at HCL Tech Q4 FY26, which may look soft on the surface, but here are the few important nuances that the investors should not miss. To start off with, the revenue in the dollar terms is expected to see a decline of about 3% sequentially. Now, this is largely due to the seasonal weakness in the product business. However, in the rupee terms, the growth is expected to remain stable, coming in at around rupees 34,000 crores, indicating underlying resilience. On the margin side, EBIT is expected to come in the band of around 17.5 to 17.7%, which is approximately 90 basis points down sequentially. Now, this is mainly because of the wage hikes and the restructuring cost. But encouragingly, on the profitability side, PAT is expected to see a growth of about 14% QOQ, supported by the rupee depreciation. For this quarter, the street is already factoring a slight dip, with the constant currency to see a decline of about 1.7% sequentially, largely due to the seasonal drag in the product segment. Moving to the deal momentum, the outlook remains encouraging, with the TCV expected to come in at around $2.5 billion, which supports the medium-term visibility. Finally, looking at the guidance and the key expectations, the street is expecting the revenue growth to come in at around 3 to 5% for FY27, and the margins to move slightly to the aspirational band of about 17.5 to 18.5%. To sum this up, Q4 may appear subdued, but the real focus will be on the management commentary, AI-led growth, and the margin trajectory. And that's where the street and the markets are focusing on.
Thank you so much for that. Well, that's the take coming in with regard to what to expect from HCL Tech. Pashupati, last quick question. So if you're not playing equities at this point, right, what is it that you're putting money behind, or you're sitting on cash? Is that the way to play it?
Well, I've got an SIP in silver and gold going, and I've had that for a while, thank God. So that's one part. But, and of course, I missed the Bitcoin, because I guess we're not allowed to own that, but I wish I had participated in that from, 4 digits to the high 5 digits that it's in now. But no, I think people are looking at alternative assets. I'm not looking so much as a diversification. I don't think it's something that one should do. But again, I'm saying we'll look into new sectors that ideally will not be affected by the Straits of Hormuz being closed. They're very few and far between. I mean, a typical sector that we can look at is telecom. And, as a derivative of telecom, one of my old favorites is Indus Tower, which is basically, the towers that communicate the telecom. So those are there. However, they could get disrupted with Starlink, because I don't know what we've signed with Elon Musk and whether he's planning to give it here. But that's a disruptive in terms of technology. However, I think that, we do need telecom. We have a huge population, and they want it cheap, and they're getting it cheap. And they're enjoying the IPL on it as well. So keep that whole thing going. And I think that that's also in a sector that one could quite easily just buy because of cash flows.
Okay, so that's a very interesting take coming in. Very interesting way of looking at telecom via the mobile towers. On that note, Mr. Advani and Shivangi, we'll let you go. Thank you so much for your time.
Thank you.
Okay, a couple of minutes left for market close. Just taking a look at what's not done well today from the broader end. It's Canara HSBC. Ola Electric, after seeing a lot of surge in the stock price, is seeing some profit taking. Natco Pharma, Eris Life, Eclerx, Polycap. So it's actually the pharma pack that is under pressure right now. It's been toeing between the red and the green, and right now it's absolutely flat along with Nifty Metal. Kunal, a quick take on some of the pharma stocks, and more importantly, now that we only have about a couple of minutes left, what should the strategy be for tomorrow? First answer that, we'll talk about pharma if time permits.
The strategy, of course, is to continue with the stock-specific positions. The markets are churning. We're seeing the index remaining to be into a sort of a range. You can call it 150 points, 200 points movement on the index as largely a range. We're just about trying to navigate around the 24,400 to 500 range for the index. What matters over here is the news flow, which is anticipated. I think today, tomorrow, there could be some announcements which could be made. That could keep the markets under edge. And the next leg of the breakout, hopefully, if that happens, should be on the back of maybe some sort of positivity in terms of news flow. That's, I think, something which the markets would probably want to keep an eye on.
Okay, so that's on what the strategy should be. And Kunal, what about the sector rotation that we're seeing in the market right now? What's been doing well, sees some profit taking, and then there's something else that does well. In terms of sectors on an immediate basis for this week at least, where do you see strength?
So I think FMCG stands to be one of the stronger ones. We're discussing a few stocks over there earlier. That's another name. That's another sector which is looking attractive. Defense, of course, even after the last 1 week, 10 days of a 20% kind of an uptick, broadly for many of the defense counters, they still look very attractive to me on the short to medium term charts. There is a possible resurgence which is coming back into the private sector banking names. Maybe I think the likes of ICICI Bank and Axis Bank could probably find some bit of favor over there. But the overall tilt for the markets right now, we are getting into that zone where the underperforming sectors and stocks within sectors which have performed very well, they are the ones which are making a comeback.
With that, let's start winding down for the day. About a minute or so left. Just taking a look at where we are close to shutting shop today. Nifty still sustaining gains of about 0.5%. So 170-point uptick coming in on the Nifty. Pardon me, that's an 0.8% gain. So 200 points gain coming in on Nifty 50. And we are comfortably above 24,550 for now. Sensex too seeing about a 1% gain, as is the case with Nifty Bank. That's seeing slightly more elevated gain, 1.3% over there. And the broader end of the market has also shown good support, absolutely in tandem with the benchmark. You have the Nifty small cap that's up 0.8. Nifty mid cap is also up 0.6%. So looking very good over there. Sectorally, it's the pharma and the metal index that continues to be absolutely flat. Only a tinge of red on pharma, but barring that, everything else is seeing some very good gains. Nifty FMCG was up 2.8%, of course, led by very good earnings for Nestle. That stock was up 8.5%. In fact, it is 8.5% as we speak, and that is the top Nifty FMCG gainer. This is followed by realty, bank, finance, defense, PSU banks, media, IT, energy, auto and metal in that pecking order. From the broader end of the market, also a couple of outperformers that have done very well for themselves. One of them being Elecon Engineering, up 8.5%. You have Grow, continues for a second day, a strong gains, 8% over there. PNB Housing on the back of its earnings is up 8%. Lemon Tree, ICICI Prudential, AMC, 5-Star Finance, Bank of Maharashtra, Zentek, Karur Vyasa are some of the top Nifty 500 gainers. But on the flip side, it's Canara HSBC, Ola, Natco Pharma, SBI Life, Sham Metallic, Polycab, Schneider Electric, Emcure and Cohance Life Sciences that's under pressure. That's the kind of roundup that we've seen today. Of course, lots of brokerage action on something like an Anthem Biosciences, where Axis initiated a buy rating. So for most part of the day, that stock did well, continues to hold on to gains of about 1.5%. But yes, lots of buzzers today, lots of individual stock action. But to sum up all of that, it's been a positive expiry for us, ending the day with almost a 1% uptick, 215 points higher, and 24,580 thereabouts is where we are shutting shop for the Nifty. But on that note, we completely timed out on this edition of Closing Trades. From Harshmi and everybody who put this show together, thanks so much for tuning in.